Hi, and welcome to another episode of BuyPointASX. I'm Mac in Oz. So what we're looking at today is Objective Corporation, OCL, on the ASX. Now, this isn't a buy recommendation video. This is one of my follow-up videos where we have a look at the performance of a company that I have previously recommended investors buy. And the reason for that, obviously, is that there's no point giving investment advice if you don't follow up and make yourself accountable. So here is OCL, Objective. This is a snap from their website, and what you'll see they do is they provide solutions for government, local government, federal and state government, regulators, wealth, banking and insurance companies. So not solely government, but predominantly government. Now, as usual, the basic question that you should be asking in regard to any company that you are considering investing in is whether or not you think the company has seen its all-time high price already. Another way of putting that is whether or not you expect the company to continue growing. And what I suggest you look at is what I call this basic black chart of the company's performance since its listing, and what we're looking for is a company that is going constantly up and to the right. Now, Objective fits that description with the exception of this area here, which is the company's reaction to COVID. And the significance of this is general in terms of making decisions about companies that you're going to invest in, because what you're looking at is the result of what is called a black swan event. Something very unlikely but devastating that has happened to the world, or at least to the market in which the company you're looking at is operating. No need to explain what happened with COVID, but there is a need to explain the significance of this period of about 3 or 4 years where companies responded to both COVID and the global disruptions that it caused, which took several years to play out. So what you really need to do is essentially to ignore a company's reaction to a black swan event, and to imagine that these two lines, the before and after lines, have joined up naturally, and this is a pretty natural path, because you can see that Objective had started growing at an accelerating rate before COVID, and that rate has consistently continued since the company actually recovered, or let's say the market that it operates in recovered, and we're back to normal and we're back to growth. Now, this is the relevant period in a more conventional chart with the simple moving average envelope overlaid. Again, this is simply so you can have a closer look at the way that the company reacted to COVID. There was obviously an enormous surge in demand because governments were spending. And government spending is largely what the attraction of OCL is all about. Because if you're going to work for someone, if you want to get rich, it's a good plan to work for people who are rich. And as you'll see, and as you probably already know, there are a few entities in Australia that has the capacity to spend money that is enjoyed by governments, federal, state, local and otherwise. So here is where the rubber hits the road in terms of the accountability. Here is the point of the first recommendation. You can go back and have a look at that video on the 16th of January, and you can see that since that time, a little bit under $16, the stock has risen to about $23, almost a 50% growth in 1, 2, 3, 4, 5, 6, 7 months, which has got to be a good result in anyone's books. And of course, this period is the Trump chaos, again, something of a black swan event, although entirely self-inflicted, but the growth is there, which is what we're all interested in. Now, the stock is approaching the zero line, this blue line here in the MACD. This is partly the reason that I'm making this video about this stock today, because it is approaching a new buy point, and here is the candlestick chart for those of you who are interested in candlestick chart analysis. And what you see here is a lot of indecision. The stock price, as represented by the blue line, which is the 20-day simple moving average, has been going sideways, which shows a period of consolidation. And as viewers, regular viewers will know, a period of consolidation will often result in a period of growth. Here are the basics about the company. What you can see is that revenues have been continually rising, which is pleasing. Even more significant, the operating margin has gone from something like, about 13%, right through to almost 40%. And you can see that the net profit after abnormals has reacted accordingly. It's a real company with about a $2 billion market capitalization. The PE ratio is off the charts, but this is a software company. So there isn't a whole lot of equity to be going on with. But in general, this company has exceptionally healthy financials. Here is what the commentariat have been saying about it. If you want to go off and do some due diligence about the stock in general, rather than just operating on my advice. But here is the real kicker. This is from the Australian Financial Review, and this is public demand. That is people who are, the market in general, as a share of real GDP. And this is government spending as a share of real GDP. Companies that are making products for governments, if they're successful, are never going to go wanting for someone to buy their products. Here is the disclaimer. As usual, if you're getting value out of these videos, do hit the like button and subscribe. And otherwise, I will see you again tomorrow.